All right, welcome everyone. We are live. Unless you're watching the recording, then we're not live, but we are live right now. For those of you that are on live, that sounds very redundant. But we are here, excited to talk about really these last minute tax strategies today. As we're starting to get people on, I can see some of you are starting to come in here from different sources, whether it's through StreamYard or LinkedIn or wherever it might be. Go ahead and just go ahead and put in just kind of say, hey, I'm here from wherever, just tell me where you're from. Love to know like who's actually on live here so I can talk to you and address you, especially if I know you personally, it's even better. So love to be able to hear from you right now. But as you're doing that, I know some of you guys are watching this live on YouTube. Some of you getting through doing this through StreamYard. Really excited to be able to cover these tax strategies. I will give this disclaimer right off the bat. I am not a CPA. I'm not an accountant. Never have been, nor ever want to be. I can't say never. You never know, right? But never say never. However, I would say that I am not a CPA. However, these tax strategies, what's shocking is that so many times when I've done this, I've had people tell me, I've just learned more from you tax strategy wise than I learned from my own accountant or CPA. And I hear that a lot. And again, I'm not saying, I'm the end all person. There's a lot of, there's definitely a lot of, different aspects that are going along with this. But, still, when it comes to this, these strategies, there are a lot of good ones here. So again, thank you for being here. Go ahead and again, type in here for, where you're from. I know we've got, someone here from Iowa as well. Welcome, Danielle. Glad to see you on here too. All right, so I'm going to start pulling this up so you can see what I'm seeing here. Let's see. Eeny, meeny. There we go. I like that one. All right, so these are the last minute tax strategies you got to know because we're in November at this point. If you're watching this live, if you're not, if you're in February, well, this will still work. It'll just be more, you have more time to do this. But this is really last minute for those of you that are, especially if you have a business or you're looking to have some tax benefits that might include having a side hustle or business, you should be listening up. This is a big deal, especially when it comes to the end of the year, because you want to make sure that you're not overpaying on taxes. Pay your legal amount, great, but never ever overpay. Now, here's the thing: is if I can show you how you can earn this extra 5,000 or 10,000 taxes every year without one spending more money, because there are a lot of people that just try to blow money, when they do that. Two, you don't have to lock money away into retirement plans, so you never really have the access. You just spend money again, but you don't have access to it. Or three, you don't have to be targeted. I said become an IRS agent, may be targeted by an IRS agent. So you don't have to be worried about audits. We're not going to be talking about some crazy high risk blacklisted strategies here. Really, these are ones that have been tried and true and proven already. So if you want to learn how to save an extra 5,000 to 10,000 a year without having to spend a lot of money, locking money away in retirement plans or become an IRS target, then just like hundreds of my clients have already done over the last 15 years, then tune in. That's exactly what we're going to cover here today. All right, so this is a meme I just love every time, and I show it with my clients because my clients get it, right? This is when you find out your friend's accountant doesn't save you as much as money in taxes as you do, right? And that's so true. I saw this firsthand. When back in the 2008 recession, I was in a world of hurt myself, and I was looking for any way possible to find and free up cash. Now, taxes was definitely one of those strategies. I wanted to make sure I wasn't paying anything in taxes if I didn't have to, right? I didn't want to unnecessarily pay anything because I was already, during that recession, living pretty tight and lean. Heck, even at one point, I was even on welfare, okay? So if that tells you anything, I did not want to have to pay more in taxes. What was really cool is, of course, I got a great accountant that was an active accountant. And this is one recommendation I'm going to give you right off the bat. You want to make sure you have an active accountant, someone who's actually a strategist, not just somebody who files your tax and takes your money, because that's what I started with. And I remember the first guy I used, he was good. But I remember I met another CPA that was much more proactive. And I told my friend, and this guy, by the way, was my best friend, who was my accountant. And when I'm seeing this other CPA do it so much better, I told my friend, I said, listen, either you learn what he knows or you're fired. Even though you're my best friend, I love you, but I don't need to pay you to be my best friend, like just because we're doing business here. And so I told him, like, you got to learn what this guy learns or I'm moving over to him. What's amazing is my friend actually not only was willing to learn from him, he was humble enough to do that. He didn't have that big of an ego, but he ended up actually taking over the company. So he actually became a partner in that company and then eventually took it over. And so I'll tell you, like, that was huge. In fact, one of the people he brought on actually is one of the people we refer our clients to even to this day, that I've known for 20 years. and learns a lot of these strategies as well. In fact, a lot of these strategies I learned from my own accountants and CPAs. So again, I'm repeating a lot of the stuff that I've learned from them, but I always say as a disclaimer, go back to your CPA, right? Make sure you're talking with them first, just to do that. And I'll give you some warnings about how to approach this because it could be very different. Now, like Uncle Sam wants you, right? He wants every dollar. But as I said, we don't have to overpay our taxes. Pay our fair share, what we're supposed to pay. But if there are ways to legally and legitimately lower our taxes, wouldn't we want to do that? Obviously, if you want to lower taxes, and I assume that's why you're here, type Y in the chat because I want to make sure that you guys actually are here for trying to find ways to save on taxes. I saw somebody comment about infinite banking. We're not really talking about infinite banking today. We are legitimately just talking about tax strategies here. And just so you know, I'm not just talking about how to talk about tax strategies, but never actually give you any. We're actually going to talk about 4 or 5 of them that I've used myself. So now here's the thing. Like I said, you can't just have the plain old accountant, the accountant that just files paperwork, whatever. You need a proactive accountant, right? You need somebody who actually is going to be a strategist as well to be proactive ahead of time. You're in November right now. You're watching this and you're thinking, okay, I got to get some of these things done. Some of these things you may not have enough time to implement. And the reason I'm doing this in November is because so often I've had people wait until December when the CPAs are taking off Christmas and New Year's. So you do not want to wait till December to book a time with an accountant. You want to make sure you're taking action on this right away in the month of November so that you have enough time to do this. In fact, every time I've done this webinar, we've always gotten a new client who's usually a business owner, and we find some last minute tax strategies that end up saving them at least minimum 5 or 10,000 a year. Sometimes it's drastically more. I think the biggest savings I've ever seen was $230,000 saved over a 3-year period. 230,000. How many guys would love to have an extra $230,000 coming back in your life that you didn't realize you were overpaying? Now, you know what's crazy about that is that this is not the same. This is not just a one-off story. I had another woman who literally had the same accountant as Mel Gibson. If you know the actor Mel Gibson, she had the same accountant as him. She was convinced. She said, "I know the accountant I have is the best." What happens? She talks to some of the CPAs that we refer to. Again, we're not CPAs. We farm it out. We refer it out for our VIP clients. And even those are part of the Wealth Accelerator Academy too. Um, and sent her to one of our accountants. And guess what? She ended up saving almost 100 grand more a year than Mel Gibson's accountant, right? So it's not about having the best accountant, the most expensive accountant, or the biggest celebrity that's out there on the media. I'll tell you, in so many cases, I've had people that have used those people and then come to us, and then they end up using a different accountant like the ones we refer them to, and they save even more money. And that's why I say at least 5 or 10,000 a year, especially if you're a business owner. If you're not, you may or may not save much. If you don't have at least a side hustle business or something like that, even if it's a real estate business, by the way, that can count as well. So just be aware this stuff works. And the reason I'm so passionate about this is because if you know my theme, it's always about cash flow. Cash flow is what creates freedom, right? I know Jessica is like, yes, absolutely. Yes to tax savings and yes to cash flow too. But that's the thing. And by the way, welcome Jenny from Idaho. Good to have you on as well. But definitely cash flow is the key. Having more profit in business is the same thing as having more extra money at home. And right now, more than ever, we've already seen this with many Americans. Average Americans are saying, man, it's getting harder and harder every day to live because my money's going down the tube with inflation and everything else happening way more than what we're getting pay increases, with wages and everything else. People are doing whatever they can to tighten the belt, and it's just got to stop, right? We got to find ways to improve our cash flow without having to sacrifice our family, without having to sacrifice our joy and our happiness as well. Wouldn't you agree? If you're all about that, type Y as well. And I'll see that probably about a minute or so later because it takes about a minute for me to see your comments. So I appreciate those being patient for me acknowledging you here. All right. So let's first and foremost talk about accounting myths. I used this picture of me at the end of a half marathon. I was about to fail here. I was about to collapse. And so I want to use that picture as kind of a way to talk about these accounting myths. Many times we get tripped up, literally and figuratively in this case. We get tripped up on thinking that we understand what's really true. And it's usually from traditional everyday accountants trying to tell you these certain things. For example, one, you ever have an accountant that tells you, I'm a conservative accountant, right? Or you might even have said yourself, even if they didn't say to you that they are a conservative accountant, think again. By the way, Debbie from California, welcome. But think again. Conservative accountants do not It does not mean that they're good accountants, right? Oh, my favorite one. This is another little bonus myth too. If they were a former IRS agent, they're probably the worst accountant you'll ever find. Almost every time I've had somebody said, "I used to work for the IRS," and then when they meet with our accountants instead after using those accountants, those IRS accountants miss almost everything. But when they say they're conservative, right? What they really mean is there's for the most part in accounting, there are some exceptions, but for the most part, there is a fine line of what's legit and what's not. The problem is the IRS tax code. I don't even know how many pages now. They keep estimating, and I've never seen it if they were to ever print it out, but it's something like 70,000 plus pages of IRS code. It is impossible for any accountant to know everything, right? And so this is why a lot of accountants, if they're really in the know, they're meeting with other accountants that are also going to conferences and doing things to find out what are these updates and trying to stay on top of these things. But a conservative accountant usually means that they're not necessarily conservative, meaning that they're safe. It usually means they're ignorant. It usually means that they really don't understand the tax rules. It's kind of like, if you knew that there's a cliff ledge that was up ahead, but it's pitch black outside, you would probably say, you know what, rather than me keep walking forward, I'm just going to stay as far away from the cliff as possible, just in case it's closer than I realize. But when you have a good tax strategist, this is different than just having an accountant that files your taxes. You have a tax strategist. What happens instead is they say, you know what, let's turn the lights on, right? Let's see what's out there. There's the cliff ledge. There's the point. Yeah, we're not going to go over that ledge because we don't want to die, right? But we're going to stand back from it. But we're going to get as close to that ledge as we possibly can while still staying safe. That's the difference between conservative accountants and really conservative accountants, like I said, are for the most part more ignorant accountants. They just don't want to keep up with the tax rules. They don't even want to know where that line is. Many cases, if you ask them, "Can I do this?" They'll say no. This is how you know you don't have a good accountant, because many accountants will say, "Okay, maybe you can't do this, but let's see if we can find a way to do it. Let's see if we can find a creative way to still make the strategy work." For example, you can't write off your underwear typically, unless you're a Calvin Klein model, right? And even then, they probably provide it for you from Calvin Klein. But you're not going to be writing off, certain personal clothes items and things like that typically, unless you got a logo on it. And no, putting your logo on your underwear does not count. And unless, of course, you're an underwear model, then maybe it does. So maybe there is a way, right? So in any case, when you get a good accountant, a strategist, they're going to try to figure out not the give you just the yes or no, but the how can we make this work? How can we find the best benefit in your situation? So be very careful when an accountant tells you, especially if it comes out of their own mouth saying, "I'm more conservative." No, it means they don't know the rules, and therefore they're going to stay as far back from that line as possible while you have to pay for it. You still pay them whether they're conservative or not, and yet you're the one that loses the money. They don't. That doesn't seem quite ethical to me. Does it seem to you? All right. Next one. This one is like that 401ks and IRAs save you on taxes. This is a 100% bold face lie. Okay. 401ks and IRAs do not save you money on taxes. If I ever interview an accountant or a CPA and they tell me, and I ask them, I say, "Well, what do you think about IRAs and 401ks?" I was going to say, "What do you think about CPAs?" But no, what do you think about IRAs and 401ks? If they say, "Oh, I love them. In fact, you should do this," I'm going to probably run away. The answer I do like the most from most accountants that do understand this, they say, "Well, in certain situations, it can be good. There's not really a tax savings here, but if we're looking at certain situations, there could be a way that we could use IRAs, 401ks to delay tax, defer tax down the road." And that's the truth, guys. 401ks and IRAs do not save you money on taxes. You only kick the tax can down the road. You're just kicking it down until later. Your only hope is that tax rate is going to be less. And notice I have this chart right here, right? That says talking about taxing the rich. The marginal tax rate. You see this since 2013. This is when the federal income tax came to be. This is right before World War I because they had to pay for it. The marginal tax rate, that's the highest tax bracket possible if you're wealthy. Notice it got up to almost 80% there about 1920. Then it dropped, of course, especially about the time of the Great Depression. Then they had to raise it again during the Depression. Notice by 1945, the end of World War II, the top tax bracket was at 94%. Guys, you understand when they brought the federal income tax, the highest tax bracket was 8% back then. The richest of the people only paid 8% in federal income tax. That would be awesome if we got back to those days, wouldn't it? Not going to happen. We pay for a lot more government programs nowadays than we used to. But notice like that 94% is huge. Even during the Reagan era, it was at 69%. This is one thing about 401ks, right? Part Parker, good point. Tax deferral is just another word for postponement, right? That's exactly it. It's it. That's the thing is that guys, we're just tax deferring. We're really income deferring down the road. The reason why 401ks were made in the first place were for high level executives. High level executives. Think about this: the top tax rate. You see that right there, especially when you get to like 1970s. This is about when the 401k came to be. That mid 70s right there. Top tax bracket, guys, was like over 70%. It was huge. Now, because of that reason, or it was 70% or 69%, whatever it was, that was the top tax bracket. So what many executives are thinking is, well, but if I retire, I'm gonna have a high income now, but if I retire, I'm gonna be on lower tax bracket because I'm making sick amounts of money today. This made sense, right? This made sense for them because they said this is great. Now in the 80s, of course, that you could see tax just came plummeting down post Reagan era, right? We saw those tax rates come down eventually. What happened here is that now the 401k in 1985 got introduced and it became available for the common man. Well, unfortunately, the common man wasn't in the highest tax bracket. So they're giving this for the common everyday Joe, but you're not in the highest tax bracket. And notice, I mean, that was pretty dang low. Even right now, we're still one of the lowest rates we've seen in history. This is a question you need to ask yourself. Do I believe that taxes will go up or down in my future? Based on everything that's going on with the government right now, with the literally, there's $6 billion of debt added every single day. Knowing that, do you think taxes are going to go up or down? And go ahead and type in the comments. I would love to know what you guys' thoughts are. Do you think taxes are going to go up or down? I'm talking about not just in the next couple of years, because I know some of you guys might think, oh, they're going to go down again. No, well, they're already down. We're already in the Trump tax plan currently. But I'm saying down the road, maybe 10, 20 years down the road, do you think that taxes are going to go up or down? About every time, guess what everybody says? Up, up. And the odds are in your favor. I'm not saying it's going to happen. Doug Rosen said up, up and away. So I'm not going to say this is going to happen, that it's going to go up. There's a chance it could go down. There is a possibility. But if I were a betting man, and I don't like to gamble, but if I were, I would bet they would go up. Well, why would I why would I defer paying taxes today when it's probably going to be the cheapest it's going to be compared to paying taxes down the road when it's going to be more expensive? Wouldn't I rather pay taxes today so I wouldn't have to ever pay tax? This is why people will often do Roth IRAs, right? This is why people will even do like life insurance. There's even accountants that realize like, hey, life insurance is a great place to store money. That's where I put it. So surprisingly, there's a lot of accountants that don't even know this fact, which is shocking since that's one of the few tax-free places you can actually put your money. So anyways, yeah, that's why 401ks, IRAs do not save you money on taxes. If a CPA or accountant's telling you get into that 401k IRA, don't believe them. Okay. All right. So let's talk about these tax saving strategies. I showed you the embarrassing photo. Now I'm showing you a photo where I won top 3 places in the race here. Jessica says up, up, and maybe up again. I agree. The taxes are definitely going up. So let's figure out how we save on these taxes. Number 1, mileage and travel. Now, if you have a business, this is the key thing. Now, if you don't have a business, by the way, if you have a lot of medical type of a very big medical situation, maybe you're, heaven forbid, you're fighting cancer or something like that, you can actually write off mileage for the mileage that you drive to and from appointments and things like that for medical reasons. You can actually write off a little bit. It's not as much as business, but you can. Even for charity work, there's ways to do that too. There are some guardrails there in place. Talk to your accountant about that. But for business mileage, yes, you can actually write off nearly about 60 cents a mile right now. So for every mile you drive that's business related, you can do that. Now, how do you do that? Keep track. You keep a journal or a log. A lot of people will use apps that track their mileage, of course, to make it a little bit more legit. So then you have something to show not just your accountant, but even to show the IRS if they ever question it. So mileage can be a great thing. Heck, when I drive to and from the airport, that's mileage I can write off, Now I drive a lot less because why? Well, I'm stuck here at home a lot more often, right? I'm not driving to as many events as I was. Now, a lot of times it's more travel, like if I'm flying and going places. And that's the thing. When you're traveling, now business travel, it's easy. Business travel is any trip you go on where you spend at least 50% of your days doing business. And I mean at least 50%. I really mean over 50%. So if you go on a 7-day trip, this means you have to have some sort of business activity 4 of those 7 days. It cannot be 3.5. That doesn't count. has to be 4 of the 7. And even if there's an 8-day trip, it needs to be 5 of the 8 days, not 4. If it's half, it doesn't count. You need to have it more than half the days of your trip that's actually has some sort of business activity. It does not mean it has to be business all day. It could be literally business for a minute or two and then play the rest of the day, right? It just has to have some sort of business activity during that part of the day. Obviously, use your conscience on this, of course, but this is one big thing I realized because I realized that I could start taking bizcations, right? I call them bizcations because it's a business trip because I'll have at least some element of business at least half of those days, but I'll still have time that I can enjoy with my family. And understand that anytime you do travel, airfare counts. Um, if you're not counting mileage, by the way, for cars, you can count gasoline, but you cannot count any mileage at all. I'll tell you, the mileage is better than the gasoline. I'm sure you don't have as big of a gas guzzler to make it, worthwhile to do gasoline costs. So just do the mileage if you're going to do that. But travel, like I said, airfare, accommodations such as hotel or Airbnb type of stay, as well as, of course, any type of food costs that are associated with it as well. And any costs that might be associated with a conference or whatever you might be attending. Yes, that's all part of it. So that trip can all be written off. Now, I'm not saying you go and write off everything, including your entire family's activities. That's a little bit tricky. But I did have somebody ask me, they're like, well, Chris, I love Disneyland. I have season passes. Can I write off Disneyland? And I said, well, yes and no. Just going to Disneyland? Absolutely not. Well, what if you went to Disneyland to try to study how they do business? What if you try to study about how they create an environment and really create an experience for people? How do you get people to smile when they're standing in line for 2 hours? How do you get people to still love it, even though they're supposed to spend most of the time standing in line, not even doing the rides? I mean, the DMV hasn't figured this out. Obviously, they can't get us to smile at all. Can't even get their workers to smile, let alone how do we get people at Disneyland to do this, right? So using that as a way or a benefit to figure out how can I create, that kind of write-off on that kind of deal. So again, if you're going, maybe you're writing down notes, you journal it, you type your notes, whatever it might be. Again, have documented reason of how I can do it. And this is the key. One of the biggest ways to make sure you can do any of these strategies is that you document. That's the big thing. You do that, your CPA, who has no personality at all, most likely, will be so excited. That means like they go from this to this. That's what an accountant looks like when they're excited. That's how excited they get. They just freak out. So that's what you can do with mileage travel. So I hope you guys don't mind. I'm having a little bit of fun with this. I gotta, because I'm not an accountant, so I can do whatever the heck I want, I guess. But no, again, I'm not an accountant. So again, talk to your accountant about this stuff. Corporations. This is a big one. Corporations, for example, here's the thing. It's one, if you don't have a corporation, consider getting one, especially if you can do any kind of side hustle. I knew somebody who was a W-2 employee, and they were talking to their accountant about this, and they're saying, "Well, what can I do?" Well, their CPA went to one of their websites and said, "You know what? Look at this. Like you've actually looks like you do a lot of photography. Is that correct? Check out their social media and stuff. Like you do a lot of photography. Is that right? Yeah. Well, why don't we just make that like a side business? Could you do some with this? You don't have to make a lot of money. You just have to have a business. You make some money, yes, but if you're already doing this kind of stuff, maybe you can not just do photography, like you're not doing like wedding photos necessarily, but it could just be maybe you're doing like nature type photos. Maybe you're doing stock photos that you can then sell online or something like that. Just something simple. And so they're able to create a business to then be able to justify writing off so many more things associated with that business. So first and foremost, corporations, right? Corporations is a key. Can you get some kind of corporation set up? Now the question always ends up being what type of corporation. Now, normally when we talk about holding assets like real estate, when you do real estate investing, you hold them in an LLC. For business, you could have an LLC, but this is the big thing that some accountants miss so often, is that your LLC could be taxed as like an S corp. Now, either you just set up an S corp, that's one thing you can do, or you have an LLC that's taxed as an S corp. You still have to treat it like an S corp. You still have to do all the documentation like an S corp, but you can still have an LLC. And by the way, my personal recommendation for myself, this is my rule of thumb, is I don't like to set up my own LLCs. I like to have an attorney do it for me so that I don't screw it up. That's my own personal thing. Yes, you pay for at least a few $100 to possibly more, depending on the type of attorney you use. But that's a very good thing to take advantage of. But if you have this S corp status, now you're in a better tax bracket. Because here's the thing: as an employee, you're in the worst possible taxable income, which is ordinary income. By the way, your 401ks and IRAs are taxed at ordinary income. That's the worst way to get taxed. The best way to be taxed is as a business owner. All the laws are made for business owners because they're the ones that ultimately hire about half the country, even the small business. So politicians love protecting small business. Even the ones that say they hate big corporations still want to protect small business because they want to screw the big corporations, or so they say. But we all know they take lobbying money from those guys and just try to tell you whatever they take to get elected. I know it's kind of soon. It's this week. It's been this week. We had the elections, right? But so that's the thing. They love big business and giving you good and really advantages for doing that, including tax advantages. So they want to incentivize you to be profitable so that you can use that money to hire more people and help the economy. Well, as a corporation, of course, now if you're just a normal standard person with in business with no corporation, I see this a lot, especially in the affiliate marketing space or in network marketing, things like that, direct sales. People will say, "Oh, my accountant said don't do it until I make a couple 100,000 a year." Well, here's a problem. When you are not a W-2 employee, you also have to pay your own taxes, including your Social Security tax, right? So you're paying for that as well. Be careful when you do that because this think about it. You don't just have federal income tax, you also have your state income tax. That alone can be pretty big for you, especially if you're in the state of California. You get just destroyed in taxes. But then you throw on the top of that Social Security tax. You're now paying into the teens in Social Security tax, right? So now you're paying that additional amount. Normally, when people, when you work a normal job, W-2 job, you pay half of that, right? So your employer pays for half and you pay for half. You see that as like the FICA FUTA, where your Social Security taxes and everything are. Well, if you are your own employer, you pay the full amount. And so when you do that, that's a big deal. Well, and this is back when the Social Security tax was 15.3%. This is several years back. Someone came to me. They said, "Well, my father's a dentist, and he's making 300 grand a year, but his CPA said he doesn't make enough to justify getting an S corporation." And I said, "Why?" He said, "Well, he just doesn't make enough money." And it's like, that's ridiculous. Because here's what I can do with an S corporation. If I just had an LLC and I just filed normally as an LLC, I just like someone who's also self-employed, right? It has no corporation. I pay all those income taxes plus Social Security tax. So I could be paying almost half my money to taxes. But if you have an S corp, you play two roles. You can be the employee and you can be the business owner. See, employees take a paycheck, which you pay taxes on. The employer or the business owner gets paid owner draws. They get paid the profits, which get taxed differently. So you can split your pay in two different places, one that taxes more, one that taxes less. I said, what if he actually just paid himself a base salary of 100,000 a year and the other 200,000 he took as an owner draw? Well, that $200,000 he takes as owner draw, he's no longer paying that 15% Social Security tax. So he's now saving himself $30,000 a year. And by the way, he's been doing this for how many decades? It's like a long time. Right. Think of how much money he's been overpaying for literally decades. If we're already saving him, we could just save him 30,000 a year by doing nothing else but changing just getting a different election on his corporation. And of course, doing that. Not to mention, by the way, I mean, when the accountant's telling him he shouldn't have any corporation at all, that's a big liability risk. If you get sued, there's nothing to protect you. Even just having an LLC alone, even if you get the full on tax, is still better than having nothing at all. And so I told her, I was like, man, that accountant should be fired and fired hard. Not to mention, man, I would be like borderline wanting to sue the guy because if he had actually been sued, he could have lost all of his family's money just because they sued into his practice. Yeah, he's got the malpractice stuff, but if it goes beyond that and they try to sue for more, they can go after his personal assets because there's no separation. So liability reasons, you need to have separation, but also just for the fact that you could also have this corporation to be able to split your income so that you get taxed less on your money. That's dramatically huge. I watched a guy that was in chiropractic. He actually saved himself over 50 grand a year doing that. I mean, 50 grand a year just by changing how he got taxed with the corporation. Oh man, I mean, you can imagine his feelings. In fact, his feelings, he started bawling his head off when he did that. I don't know if it's out of joy or out of this pain and misery from overpaying on his taxes. It might have been a little bit of both. But I know when I was on that call, I was a little bit uncomfortable with the guy. I thought it was good news. I didn't know how to interpret it. Needless to say, he did not deny the 50,000 extra a year that he was able to get back in the tax return money. So just be aware of that. Hire your kids. This is another option you can do as well. You can actually hire your children. I showed, here's my kids. If you have them in a cardboard cutout or whatever cloth cutout, this is one of our Christmas cards one year, and so we have like 8 kids total between the two of us. You can pay your kids up to about $14,000 a year, and they pay no tax if they're minor. This is if they're under the age of 18, right? Your kids can earn about 14,000 a year and pay no tax. This means if you've got 4 kids, that your business could be paying them $56,000 a year up to. Now, it has to be justifiable. This is the big thing. Everybody talks about this strategy and they're like, yeah, it's easy. You got to be able to justify it, right? Like I've done the strategy as well. It's got to be reasonable. It's got to be reasonable for the job you give them. You can't say, hey, I'm going to pay you $100,000 a year for cleaning my office once a week. No, that does not count. Even my kids, if they clean my office once a week, still, they're not even going to they're not even going to make 14,000 a year, right? Because can't even find cleaners that would charge that much. So I try to go with what would a professional charge me? Then you can also pay your kids. Now, this is a write off for the business. Now you might say, well, yeah, but I'm still spending money. And that's correct. But what if you're able to take that 14,000 a year you would pay your kid, and then that pays for their sports, some of their school fees, that pays for their extracurriculars or their clothes and things like that, the things that you couldn't write off normally, now in an indirect way, because you're paying them the money to then they can buy those things. It's kind of an indirect way to be able to get tax advantages even when you're paying for personal items, right? So again, they can be paid up to 14,000 a year tax free. Now you go above that, it's still 10%. That could still be less than what it would be for you to take that paycheck home. So you could still pay them more and still save a lot in taxes on them. But just know that you can actually hire your kids. I had a woman in California, she had 6 kids. She's like, wait, Chris, are you saying I can write off almost 100 grand a year? I said, potentially, yes. Now, the question comes up. Someone says, I've got a 1-year-old or 2-year-old. How can I do that? Well, the easy answer, I mean, there's not much they can do. They're definitely not going to be doing your bookkeeping when they're 2 years old because they'll throw fits. Terrible twos and bookkeeping just don't go together, right? But besides that reason, the other reason, of course, is that you could actually do something like modeling. You could do something like that. Could they be in the family photo? How many times have you guys seen in your mail coming in, some advertisement for some dentist or orthodontist with his big smile, bright smiling family on there? You don't think, well, hopefully they are, but you don't think they're probably paying to have their family be models for their business? Of course they are, right? Maybe you do stuff for social media. Could you be doing it for that, right? Find out what the standard modeling fee would be, or even if you're using them in videos, how about for hiring child actors? What is that standard pay in your area, right? That's, again, it always has to be documented. What's the standard pay? That's what you look for. So definitely some cool strategies you can do. We're already with like just 3 strategies in. Are you guys getting something so far? Go ahead and just type Y, yes, N for no. If you're like, boring, but definitely let me know if you guys are still on with me and that you're still learning something here. So I'm going to move on to a couple more strategies here. All right. Okay, next. This is one that I often forget to teach my own clients, is that if you have an IRA and you're trying to figure out, how do I get cash out of my IRA and not have to worry about paying taxes on it? And they actually use it for my own personal expenses if I'm not 59 and a half. Jenny, appreciate you saying you're getting some good value out of this. This is good. But you can convert your IRA to a health saves account. Now, it's not a lot. It might only be about roughly 7,000 or so a year that you can convert. But yes, you can move money over from an IRA, transfer it to a health saves account, and pay 0 in tax. This means that the medical costs you would normally have been paying out of pocket, you could be using from your IRA money. Now, if you currently have a 401k with your work, sorry, that's a little bit tough to try to get that money out unless there's some special provision they put in there. But for the most part, you probably have the only option you probably have with a 401k is to borrow from it for the most part. But for IRAs, if you have a traditional IRA, I wouldn't do this with a Roth because the Roth is already tax free. But if you have a traditional IRA or an old 401k, maybe with an old employer that you're trying to figure out what to do with, which by the way, we do coach people on what to do with that kind of stuff. You can convert some of that money over from that old 401k to a health savings account. And now you've got cash you can be using for your family's medical expenses. And by the way, it's not just going to the doctor. Sometimes that includes your chiropractor. It can, in some cases, include massage therapy. It can include a lot of different things that you may not even realize. Even the dentists, right? Even when you go back to that smiling dentist, then you can ask them, hey, did you hire your kids? How should you pay them, right? You can ask them that when you're going, when you have your mouth wide open. So you can do that kind of stuff. So yes, you can actually convert IRA to an HSA, a health savings account. And then the last one, a real estate professional. Real estate professional, this is one that we have a lot of our clients asking about because, they might be a W-2 employee and they say, well, listen, I've got a W-2 job, or maybe I work, but my spouse doesn't. Is there something we can do, some business we can do that's still real estate related? And the answer is yes. You can become a real estate professional. There are a lot of little guardrails around this, though. One, you cannot work more hours at your job than you do as a real estate professional, doing anything real estate investment related. By the way, when I say real estate professional, this does not mean you're a real estate agent or a broker. This means that your business is like real estate, rental real estate. It could be Airbnbs and things like that. That kind of real estate is what I'm referring to. But if you say you work 2,000 hours a week at your job, or sorry, you better not be working 2,000 hours a week at your job. That's impossible. But if you're working 2,000 hours a year at your job, that means as a real estate, any real estate activities you're doing has to be 2001, right? It has to be 2001 hours per year that you're doing. Now, if you have a spouse, on the other hand, who maybe is stay at home, or maybe they've retired or something like that, well, then the minimum is roughly about, there's some debate on this, but it's roughly about 750 hours a year. That's an average about 15 hours a week. Now, you might be thinking, how in the heck? Because Chris, I know you teach about passive income. Why would I ever want to work more than 15 hours a week? Well, it depends on what classifies as those hours. It has to be anything related to real estate. Well, if you're talking to your CPA, guess what? Those are hours I would count, especially if it's talking about your real estate taxes and strategies and things like that. If you're doing anything dealing with any kind of research, if you're looking at real estate, maybe you're traveling and you said, you know what, let's go check out this property. Maybe you're one of those people like my wife and I kind of are sometimes, where you like go to an area and you say, let's just go to this open house. Let's just check out and see what it's like. Let's see what the prices are like out in this area. Go do that. Monitor it, track it. I knew another real estate investor that she actually went in an RV in the summertime. They traveled around and they literally did just that, looking at properties all along the way. Now they weren't like constantly always looking at properties. They were still enjoying and having fun and doing stuff. But as they were traveling, they're doing that. And then they were counting the travel hours to go to these places where they were looking at real estate investments. So if they're RVing all the way across the country and it takes, 50 hours plus, I'm sure it's probably hundreds of hours of driving, but let's say it's 50 hours plus, they all count those hours for their real estate professional status. So there are ways to do it. So again, it's not the easiest thing to do. You have to really decide if that's something that you and or your spouse would want to do. But that's something that now, instead of just doing real estate and writing off just the gains, now you can actually show a loss on your taxes that can offset any active income you do have from a job or your spouse has from their job. I actually know a friend of mine, and he's also a client of mine too, and on the infinite banking side. But he actually, does invest in apartment buildings. He literally, like, his wife makes 75,000 a year as a teacher. He makes about 1 million in real estate a year. His tax return showed 25,000 a year that he made. Now, I don't recommend going down to 25,000 a year because good luck trying to get any kind of loan. Even if you're trying to get a car loan, they say, well, look, you're broke. You have to like really have them factor in depreciation. You have to have a banker that knows what they're doing there. But still, that's pretty impressive. He not only wrote off all of his income in real estate, but he wrote off most of his wife's income as a teacher too. So there are cool things you can do to be able to, again, have a business, but then be able to write off. But the business is actually investing in real estate. Not for everybody, but it can be a great strategy. By the way, as a bonus here too, speaking of real estate investing, if you do have things like rentals or whatnot, and we like to do more passive rentals like turnkey rentals where somebody else manages the property for you, yes, you can actually have things like depreciation and things like that that will offset the gains, the income you're earning. So you can actually have virtually, either very tax advantage income or even almost tax-free income, depending on the situation and the properties that you're buying. That means you're getting passive income you're paying no taxes on versus taking out from a 401k or an IRA where you got to pay the full brunt of taxes, right? So not always the best thing there. That's one great thing to do. Let me just throw in one other little bonus here too. Again, dealing with business expenses, you can write off anything that could be justified as business. For example, can you write off utilities? Potentially, yes. Cell phone, potentially, yes. You can write off these things. And that kind of leads to this next thing as well, which is the Augusta rule, right? Many people say, well, what if I pay for a home office? Now, I'll tell you, recently, IRS does not like when people pay rent for their home offices anymore. But there is a rule called the Augusta rule. Now, this is the more the nickname they gave it, just more commonly looked at. But just this strategy has been around for a while. I was actually teaching this strategy 12 years ago, and there's people like trying to call bull saying that's not a real rule. Well, now you got all kinds of accountants and CPAs teaching this thing now, and they literally quoting the tax code for doing it. I didn't put the tax code on here. I always forget for whatever it is, but either way, it doesn't matter. You guys can Google it. You can find it yourself. You can also talk to your CPA or accountant to ask them about this. The Augusta rule is based on Augusta, Georgia, because during the Masters, when the big Masters golf tournament happens, they actually were able to convince the politicians to say, listen, I want to be able to rent out my house. I want to leave this place when the place gets packed with visitors. I want to be able to leave this place and be able to rent out my property, but I don't have to pay taxes on it, especially because a lot of these people had money. Some were even politicians, of course. And so they were able to get the rule passed that as long as you don't pay, as long as you don't earn rent on your home more than 14 days out of the year, it's tax free. Now, once you go to that 15th day, it's taxable. This is why you don't want to just do like a monthly payment, right? You don't want to just say, okay, I'm going to pay for a month's use of this home because that's 30 days, you're taxed. Now it's passive income tax. It's still better than ordinary income tax, but still you don't get that tax-free advantage. 14 days is the limit. Well, what if? What if you have a business, of course, this works if you have a business, not if you don't. If you have a business and you use your home office for one day of the year, this is even true even if you have a business outside of your home. But let's just say you pick one day of the year. Maybe this is a big admin day. Maybe you do a team meeting or something like that at your home. You can then pay a justifiable amount. What is that amount? It depends, right? And again, talk to your CPA or accountant about this. But here's the easiest strategy I've learned from my CPA is what I did is I just said, they said, listen, Chris, go find a hotel. What would it cost to get a hotel room? And I don't mean a hotel room like I'm going to go sleep in a hotel, but like get a meeting space in a hotel. What would it cost for that meeting space? Especially if you want Wi-Fi, if you want, could be catering or not, but that's debatable. But just basics, simple stuff, AV equipment, things like that. Because obviously, I'm using AV equipment in here. I'm using internet and things like that here as well, right? So I called up my local Marriott in Salt Lake City, and I said, "Hey, can you give me a quote on your smallest room?" I didn't want the biggest room. I didn't want to like say, "Here's a conference room" and all that stuff. I'm like, "Give me your smallest, little room that you've got, and I want a quote on that for one day's use." And so I did, and made sure I had Wi-Fi and things like that, and it came back over $2,000 a day for that one day's use. And I said, "Awesome. Well, then I now have actual," and I got the actual paperwork from them to use as documentation for the IRS. I said, "Great. Here we go. Well, I'm going to do less than that. I'm even going to just do a flat $2,000 for the day's use of my home office." Again, I'm working this office all the time, but I pick specific days, especially if I'm doing like video recordings and things like that. I'll pick a day. So imagine this. Imagine if I just picked one day a month. That's 12 days a year. That's below the 14. That one day a month, I do 2,000. 2,000 times 12 is $24,000. That now is a business expense, but it's income tax-free to me personally because Money Ripples will pay Chris Miles for the use of his house, of this home office space specifically. So I get to write off, up to, really I can do more, but like up to 28,000 a year. But it might be between 20 and 25,000 a year that I'll be writing off by using this home office space. Again, tax-free income to me. You know what that saves me? Guys, that saves me like well over 10 grand a year in total taxes there. Doing nothing different, just splitting my pay a little bit, or some of I might pay as owner draw. Instead, I'll just use that to pay as this is one of the business expenses that I have for the home office use. So that's one of those strategies you can actually use for yourself. Again, talk to your accountant, your CPA. Everybody's different. I'm not saying just because I researched in Salt Lake, this works in Mississippi, because I guarantee it does not work that well in Mississippi. So just be aware. It could be more, it could be less, but you just want to find that right amount, and definitely consult your tax professional to do that. Cool stuff. Is that pretty awesome? For those of you guys, this one strategy alone, this last one here, has saved our clients so much money. This is the one that almost every accountant will miss and not recommend. Very few have done it. More doing it today than there were when I were first teaching this, because it's not as crazy anymore, but it's definitely a big one. So like I said, so many things to do. Now, guys, kind of wrapping up here, I want to kind of talk about big picture. If you've got questions, like, again, I'm not a tax professional here. If you got questions, type in the comments. I would love to be able to answer those here live. Since it's not Zoom, I can't hear you, but feel free to type in the question, because it will take me a minute or two to see your actual response. I've been noticing this as some of you guys have been responding to my questions, minutes later when I see it. But here's the ultimate thing, guys. This is about acceleration of money, not accumulation. Every financial expert and financial advisor and stuff will always tell you, hey, you know what? Accumulate your money. have that miracle of compounding interest work for you, that eighth wonder of the world, right? All that kind of stuff. They'll tell you those kind of things to set it and forget it and just let your money sit. And then you hope it grows to a significant amount that someday you might be able to live on it if you're even alive for that someday. We're all about teaching acceleration. How do you get money back in your pocket today? That's exactly what this is about, right? This is why cash flow creates freedom, right? We want that freedom to happen for you. It's acceleration of money because the more money you get in your pocket today, that's more money can work for you today. And this is kind of the big picture we teach about how you create better wealth. One, it's got to start with those education and those principles. You got to understand that you can't buy into the accumulation theory that every financial advisor teaches, but instead focus on how can I accelerate? How can I create more wealth right now in my life, right? What can I do to improve my cash flow situation? By the way, not just even from taxes, we had hundreds and hundreds of our clients that would use some of these strategies. Some of them were tax related. Some of them were even, just doing other things like paying off debt. It could be a ways to track money and do stuff that can actually help free up and improve their cash flow to where on average, they've been usually freeing up at least, $2,800 a month, a huge amount of money for themselves. And so this is the kind of same thing you want to do because if you get that money back in your life, now you've got options. Cash flow creates options, and options is what creates freedom for you. And so take these principles, use that education, just like we're teaching with these strategies of tax saving strategies and things like that. And then what do you do with that money? This is where the money's got to get out, right? You got to get this money working for you. Now it goes into passive investments. Now, if you want to pick up some extra tax dollars along the way, that's where you got things like the max ROI infinite banking, right? That we talk about using life insurance, where it's like a tax-free supercharged savings account, now paying over at least 6% a year as tax-free. As I talked with on a popular real estate podcast I was just on, it hasn't aired yet. I was talking to him about this and he was very skeptical. He's like, I've heard people talk about this all the time. It's like, I haven't seen a good reason why a real estate investor should use this, or a business owner for that matter. And I said, well, other than it's tax-free, which obviously I love, and two, it pays better than my point nothing percent savings account that I have, which I also have to pay taxes on. So one less tax form and I make more money. But three, this money is 100% protected from lawsuits and creditors in most states. He's like, okay, that one reason alone, I would do it. He's like, I don't even care about, protecting my family. I don't care anything about that. But that reason alone to protect my money and be able to store it more safely than the bank, and lawsuits and creditors can't get to it. Where in the bank they can, even IRAs, they can get to it. 401k is the one place that's actually protected. But this is the second place that you can actually have protection of your money. So not to mention I have access to my money now. So it's not locked away from me. I can still get to it. I can still use it for emergencies, which is where I store most of my emergency fund anyways. And it's a good place to store my money if I'm looking to eventually invest in something. Now I'll still invest with my checking and savings account and just get it out and deploy it. So if I'm going to hold cash anywhere, I hold my cash here, but it's also a place I can pick up dollars and make money in two places at once. So I'm not making this about the focus of this, but this is definitely something that can be used. This strategy that can be used to help accelerate you towards your financial freedom goals. Passive income, right? As Warren Buffett says, if you don't make money, if you don't find a way to make money while you sleep, you will work until you die. Like I kind of show this meme here. It doesn't mean that you have to be literally woken up from your sleep and making money that way on YouTube. But no, you got to be finding ways to create passive income. And so when we free up this cash flow, yes, we can run it through the infinite banking. And then from there, we can also run it through to invest and create more passive income right now. And I will tell you, this might be a little bit controversial, but I actually foresee that there's going to be another little inflation wave that we're going to see coming along. Interest rates will not be coming down much. They will probably stay kind of more elevated than what we're used to. And we'll find out that we're going to have to figure out how to have more cash flow right now. That's my prediction. I actually predict that because of some of the good policies that are being put into place or could be put into place, depending on if the government allows it. But if you free up more money in taxes and you raise tariffs and you do things like that, you do create a stronger economy, which of course drives more inflation, which could also mean you're going to be paying more at the gas pumps. It could mean that you're actually going to be paying more at the grocery store. It could be mean you're paying more for a mortgage, or not as much as you have been, but still paying more than you want to. And so as a result, this is why you got to have passive income to protect against those kind of things. Having other streams of income besides just your business or your job to keep you going. I'll tell you, even if you're a business owner, you need passive income to protect yourself because we never know if we have another 2020 where all of a sudden they want to shut down businesses. We've got to have that happening. This is why we got to free up cash flow. And this is why we got to take that cash flow and use it to invest to generate more income for you so that you work because you want to, not because you have to. And give you an example, this is one of our clients here. They came to us just to wanting to learn about real estate investing. And but when we first got all their numbers, we actually get like a spreadsheet called a cash flow optimizer from them. So we see income and expenses, we see their assets and liabilities, we see the full picture of what's going on in their financial lives. As we looked at it, we said, wait a minute, hold on, we got some debt we probably should pay off here. What if we went and paid off some of these loans here? We actually refinanced their home and things like that. If we do that, we'll free up $3,800 a month in loan payments. So before we even worry about investing a dime into real estate, why don't we start trying to find ways to free up cash flow by freeing up $3,800 a month? So guys, that's really like almost, that's over 45 grand a year. On top of that, we had them meet with a CPA, and what did they find? They're able to save over $30,000 every single year from this point forward. So already, even before we did anything with investing, they'd already pretty much improved their cash flow by about $75,000 a year. Again, results may vary, right? These guys are significant here. We also had them sell a rental because that rental was cash flowing nothing. So we sold the rental and put it into other real estate to make an extra $2,000 a month from that equity. So already at this point, we're now about 100 grand a year. And then we finally got to, hey, we got all these stocks. What do we do with it? Okay, cool. You can start investing with some of this money. So that's the thing, is that it's always about that cash flow. If you can create more cash flow, more profit, not just in your business, but also in your personal life, this is what creates more options to create more freedom for you. That is the kind of thing that you want to be able to do for yourself. It's not just about the taxes, although that's a big, big piece. It's about the whole picture, getting that to work together. And guys, this is the thing. Like you can try to take the long way or you take the short way. This is actually literally while I was driving to the bank, and I was just a few blocks away from the bank, which is funny. It was either 1 minute, which is of course more eco-friendly, or I can go around the block, which apparently would take me about 76 years to do. Or 67 years, I think it was, or something like that. 24,855 days and 3 hours slower than the other way. And I'll tell you, most people, they do the traditional stuff. If you use the same old accountant you've always used, you will get the same old, really the results you've always gotten. You keep using the same financial advisor you always had, you will keep getting the same results. And most likely you'll get the results of everybody else in America, which the results are not good. People are not becoming financially free in America. There are a small segment, very small percentage, but they are not the ones that listen to financial advisors, nor have average everyday accountants. They have to have, if you want to elevate and up level your finances, you got to elevate and up level your team. The team is everything. Those people that work together as one and make sure that they give you the best bang for your buck every time, and focusing on how do we improve your cash flow now. If you improve your cash flow now, you'll improve your wealth for later. And that's the danger that everybody has, that so many people are living their lives thinking they can spend all they want, spend their life doing whatever they can do on the bet that hopefully someday they'll have the freedom to do it later. Guys, you may not have that someday. That someday is today. That's what we need to start doing now. So, all right, so let me start addressing your questions. I know there's several of you guys on. Type in your questions now, because I'm about to start answering the ones that are already in the chat. But if you have any additional questions on this about tax strategies, could be about cash flow or whatever it might be, the overall finances, let's go ahead and start typing those in. All right. So the first question I'm getting here from Debbie, this is a good one too. How do I hire a 2-year-old grandchild as a model? Do I have to put him on payroll? How do I pay him? All right. So again, Debbie, I'm not an accountant, so I'll always, as this disclaimer, because we're recording this, I'm going to tell you to talk to your accounting professional. But you can hire a 2-year-old grandchild. You do want to have paperwork, saying that you have like a contract or something like that. And it could be a very basic contract. You don't have to make this thing like ironclad, like an attorney has to draft it, although it doesn't hurt, if in some cases. But again, it could be a very simple contract that you type up saying, here's what the scope of our work. I would recommend Googling it. Google what's a good standard contract. AI, you have AI help you or something like that. We got Chat GPT that can help us do these things now. But yes, can you put them on your payroll? You can. Yes, you definitely could do that. And how do you pay them? The best thing is obviously you set up their own account they have. Now you could be a joint owner on the account, because if they're a minor, you probably have to be anyways. You can be a joint owner on that account with them, but you could pay them. You can even just do direct deposit or just do a transfer into their bank, wire transfer, or just a simple transfer. Because if you're on the account, you can obviously have control of that too through connecting bank accounts and things like that. So the paying part is actually not that hard, but definitely make sure there's a good agreement in place. Make sure you are paying them a fair wage, not above what's fair. Don't make them seem like they're the next Haley Joel Osment or whatever you might be, right? Like it's definitely not going to be that good. But yeah, again, talk to your accountant. See if they have any ideas as well. If your accountant doesn't do that, then you might consider finding an accountant that does understand that kind of stuff. Great question. All right, Doug asked, can IRA to HSA conversion work for someone over 65? Can HSA be used to pay for insurance premiums? Depending on the kind of insurance you're asking about, Doug. First, can it work for people over 65? Yes, because remember, IRAs still that money can transfer over tax free, right? It's still bypass the taxes into an HSA. Reason being because you can actually fund an HSA and get a tax write off. So for those of you that maybe don't have an IRA, you're like, well, I can't do that strategy. Well, if you have a health savings account, the contributions you do into the health savings account can be a tax write off for you. So understand that. So yes, Dougie, if you're over the age of 65 or 60 or 59 and a half, doesn't matter, that can still work. You still transfer it over and still use it for your what qualifies as medical purposes. If you Google it, it's a very extensive list of what qualifies and what doesn't. The nice thing there's more, in my opinion, more qualifies as medical expenses than you would think, but not everything qualifies, right? So, like I said, like even like doing things like massage therapy could be like part of physical therapy and things like that. So that could be considered an actual health type of expense. So yeah, you can convert it over. Now, can it be used to pay insurance premiums? That one, my guess would be probably not, depending on what kind of insurance you're referring to. I imagine you're talking about health insurance premiums. Honestly, I would have to look that one up. Normally, I just, because you can have different things with businesses, I do it differently on mine where I make it more of a business expense. But could it be used to pay insurance premiums? There's a possibility, but I would say check with a tax professional before I answer that. So again, because I'm not them, I don't want to say something that maybe was true one day and not the next. But that's a great question because if it could pay for health insurance premiums, which it may or may not be able to do, that would be a great use of it. So cool. All right, guys, I know we're coming up on the top of the hour here, or the bottom of the hour to the top of the hour. Appreciate your questions. Here's what I challenge you guys to do. If you guys are wondering, like, okay, what else can I be doing? Is there a way maybe I could be doing something better? Maybe you're thinking, I'm probably way overpaying on taxes. I need some help. Definitely go ahead and you can reach out to us at moneyripples.com with questions and things like that. We even have a passive income calculator. So if you're saying, hey, I've got cash sitting around, can I invest it to make more passive income? And even if you don't have cash sitting around, sometimes it's sitting in places like home equity that could be used, especially if it's in rentals and things like that. You might be able to improve your situation some more, even if you already are investing in real estate and things like that. So definitely go check out moneyripples.com if you have any questions. But hopefully this is great for you guys. We can actually put the calculator link up there. Oops, I'll do it again. There we go. There's the link for you on the calculator. So moneyripples.com. Again, if you just go there, you can see it. There's a passive income section that's right there. So anyways, guys, appreciate you guys joining us today. Hope this was valuable. Hey, if you thought so, go ahead and type a comment, type like, hey, this is one thing I got. Which strategy was your favorite? Type that in the comments. I'd love to hear about it as well. But guys, go ahead and make it a great day and we'll see you later.